Good morning, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here. Now, today is Monday, April 29th, 2019, and we're going to get right started. We're going to open up the charts right here, and we're going to take a look at what's going on. You know what? Right here, the liquidity conditions within the U.S. banking system. Now, you guys know that they've been doing what's called quantitative tightening. They've been removing $50 billion a month from the liquidity system that's available, the ample liquidity that was out there. And there was about $2 trillion worth of liquidity out there, At $50 billion a month, the effect wasn't big at first. But now the effect is starting to really chomp into the amount of liquidity available in the system. Liquidity conditions in the United States banking system right now are perhaps the tightest they've been in a decade. You have to go back to 2009 to get liquidity conditions that are this tight as they are right now. And, this is causing problems within the system that haven't manifested themselves yet. Tight conditions is when conditions drop below about 1.5 trillion. They're at 1.4 trillion right now. And they're dropping because next month they're going to pull another 50 billion out. That'll make it, instead of 1.4 trillion, it'll make it 1.35. 1.35 trillion, and then the next month it'll be 1.3 trillion, and then the next month after that it'll be 1.25 trillion, and so on. You see how they're drawing that liquidity out, and they're not going to stop until September. And I don't know if we can make it till September if they keep pulling this liquidity out of the system. This is what this article says right here. It says, brace yourself. The next economic collapse could be weeks away. And part of this is because they're drawing this liquidity out on weakness, where the world's economy, the whole world's economy right now, is basically borderline recession right now. China's particularly bad. These trade talks are not going well. It doesn't look like they're going to come to a deal anytime really soon, And even if they do come to a deal, I mean, this whole thing is playing itself out exactly like what happened with the tariffs back in 1929, that led to the great stock market crash. It led to what was called the Great Depression era of the 1930s. It says, brace yourself. The next economic collapse could be weeks away. And, this collapse is probably going to be different than the one that occurred in 2008. First off, one of the things that makes it different is the federal funds rate. They haven't got it too much. The effective federal funds rate. Let's take a look at this. And let's get in real close here and take a look at the effective federal funds rate. And this is one of the things that's going to make this collapse a lot worse. If you can see, this chart goes all the way back into the 1970s. Look at where the federal funds rate was back around 1980s, in the early 80s. Look, way up here, near 20%, over 15%. But look at where it is right now. We've had the longest period of 0% interest rates, going back almost to 2008, almost up until about 2016. And then they started to raise the federal funds rate, and they've only got it up to not even 5%. They haven't been able to even normalize it. Now, the federal funds rate, you can see back in 2007, was normalized when we went into the last problem in the financial system. This represents a huge problem for everything. The fact that they haven't been able to normalize it, and now they're having to reverse it already. Oh, my goodness. Let's take a look at silver today. Silver today is having problems. If you can believe that the best safe haven asset in the entire world, right here, is having this much problems right now, just before crisis is getting ready to hit. It's been suppressed, and it's continuing to be suppressed. They've smacked it down again today. It's down 21 cents again today, $14.90. It's just ridiculous what they're doing with this. Let's take a look at gold. 1280. It's been smacked down to. We're looking at down $5.90. Let's take a look at cryptocurrency today and see what's going on with cryptocurrency. I'll tell you what's going on with cryptocurrency right now. Cryptocurrency, it basically had a very strong action to the upside, and it went up to like $5,300 and whatever dollars, and it was riding strong at over $180 billion worth of market capital in the total cryptocurrency industry there about a week or so ago, and now it's fell back down. But this is just a movement in this general, it's going sideways. Basically, I can't say it any other way, but cryptocurrency probably for about the next 3 months, I expect it to go sideways before we finally enter back into a bull market again. So I'm expecting sideways movement now for a while. This is a place where it's really good for accumulation. And the same thing with gold and silver right now. We're looking at, this is the accumulation time. If you're smart out there, and this is my opinion only, but this is accumulation time for gold, silver, and cryptocurrencies. Let's take a look at cryptocurrency market capitalizations today. $167.5 billion. Now that's fell back. It was up at $180 billion. So it's lost about, $12 billion or something of market cap in the last week or so. It's at Bitcoin dominance extremely high. 55% Bitcoin dominance. And so Bitcoin has been maintaining its price a little bit better than the alternative coins. We're looking at Litecoin down to $67 again. It's a terrific price for Litecoin. Okay, so we'll run through the coins real quick. Ethereum's 153, XRP is 29 cents, EOS is $4.51, Bitcoin Cash is $237, Litecoin is $67.35, Binance Coin is $21.41, Stellar is 9.6 cents, and Cardano is 6.4 cents. Tron is 2.2 cents. Okay, that's what the coins are running at. Now, the Dow Jones Industrial Average for today. I'm going to have to refresh the page. Well, we're just about even with the board right now at this second. It's basically even with the board. We're at 26,543, and the Dow has been slowly drifting upwards. It's way oversold, and I think it's ready for a steep correction coming up very probably within the next 3 months. I'm expecting a steep correction in the Dow. That's what I'm expecting. Not really a crash, but I think it's going to be enough to instill action in the Fed. I think they're going to go back to a looser monetary policy pretty darn soon. Let's take a look now at crude oil. Crude oil today is off 33 cents, or 0.5%. It's at $62.97 for today. Now let's take a look at the Treasury market. And all the yields are going up today. We're looking at yields all the way across the board going up. The U.S. 1 month is at 2.45. The U.S. 3 month is at 2.42. U.S. 6 month is at 2.45. U.S. 1 year is at 2.41. U.S. 2 years at 2.3. U.S. 3 years at 2.275. That's 2.275 of the 3 year. 2.3 on the U.S. 5 year. 2.41 on the 7 year. 2.52 on the 10 year. And 2.95 on the 30 year. And these are pretty good moves to the yields are creeping up today. Pretty good moves to the upside. 2 basis points, or 2.5 basis points on the 10 year. The 10 year is the one I watch the most, Now let's take a look at the U.S. dollar index today. And we're looking at it maintaining its level above 98. 98.06 today. We've got a really strong dollar out there, you know. And it doesn't surprise me with liquidity drying up the way it is. And they're going to continue doing this until September. I can't see us making it till September with them drawing $50 billion without a crunch, to be honest. So we've waited a long time for this crunch to happen. I thought this crunch would happen a long time ago. I thought that they would draw the liquidity pool down a lot longer ago than they have. They've been able to run this quantitative tightening a lot longer than I thought without draining all the liquidity away. But we're finally getting down to the point now where we're starting to get down to the nitty-gritty. And they're still drawing $50 billion a month out. And they're planning on continuing until September. I don't think they're going to be able to get away with it. I think we're going to have a liquidity crunch before we get to September. So listen, thank you guys for listening to this market report. And give me a thumbs up, and we'll catch you guys in the next show. Bye-bye, guys.